Hi, this is Hubert of the Fractal Science channel. This is part 2 of why silver is the ideal asset for monetary collapse and why silver will outperform gold during this financial crisis. Part 2 will deal with the technical support or the technical analysis that supports my theory of the reversal of the debt bubble that was created by the demonetization of gold and silver. And I will also cover why I think silver will outperform gold during the remaining part of this crisis. I will look at the gold-silver ratio as well as the Dow-gold ratio. I've got this chart which I got from Mind Fund and one from Share Links to create long-term charts. The top one is the gold-silver ratio from 1791 to today, and the bottom is a 200-year Dow gold ratio. Now, as I've said before, the demonetization of silver first and then gold diverted value from gold and silver to paper assets linked to the debt-based monetary system. Now, on this chart, I've drawn a vertical line at 1872. Now, you can see from about 1872, when silver was demonetized, the gold-silver ratio started to increase significantly, making 3 significant peaks after 1872. It also obviously became volatile with those big peaks. And if you look at the Dow gold ratio, it also started to increase significantly after the 1872 demonetization of silver, and it made 3 significant peaks as well. It obviously traded much higher after the 1872 period. Now, why I have the Dow gold ratio in here is because I take it as a proxy to what extent value has been diverted to paper assets or assets linked to the debt-based monetary system, as well as stocks, which obviously are covered by the Dow. Now, if you look here, you will see this means after 1872, with the increase in the gold-silver ratio, that means a lot of value has been diverted away from silver, because suddenly now silver has lost a lot of value against a monetary asset, which is gold, because gold was still a monetary asset at that time. And then eventually in 1930, gold also was also demonetized, and then you can see the peaks get even higher for the Dow gold ratio and as well for the gold silver ratio. So basically the demonetization has diverted value away from monetary assets since 1872. Where did it go? As you can see in the Dow gold ratio, like I said, it's a proxy for to what extent paper assets are overvalued compared to real money, and as I said, it traded way higher since 1872 compared to the years before 1872. Now, I think since 1999, this trend has been reversing, with both the Dow gold ratio peaking in 1999, with the Dow gold ratio peaking in 1999, and obviously has decreased significantly since then. Now, according to my analysis, I believe that this reversal of this trend is about to increase significantly. So what I'm saying here is basically that compared to the last 10 or so years, the increase in gold and silver is probably going to be immaterial compared to what will happen over the next couple of years with the gold and silver price. What I also wanted to highlight here was in 1980 when the silver and gold peaked, and as you can see the silver gold rate, the gold silver ratio also bottomed at that time. That, I believe, was a prelude for what is coming now. That was the end of a cycle, probably a cycle from about 1920 to 1980, and that just being a cycle, what is going to happen now is most likely the end of a major cycle, end of an era of this debt-based monetary system. And as you can see in 1980, that when gold and silver peaked, the Dow gold ratio actually tested the 1870 level. As you can see, they tested the 1870 level, which is about the 1 level. That was exactly the level at which it broke out of when silver was demonetized. And at that same time, in 1980, the gold-silver ratio bottomed at a level of 16, which is a pre-1870 level. Was just about below the breakout level of 1872. Now, do you think that is a coincidence that both of those ratios actually tested the pre-1870 levels at that time, when it seems like the monetary system, probably seemed like the monetary system was collapsing at that time? And like I said, that is just a prelude of what's going to happen. Next time it will test that level, and then eventually it should go through that 16 level. The other thing I wanted to point out was the fact that the gold-silver ratio appears to have a double top at about the 100 level. That is 1942, and then in the early 90s as well at the 100 level. And then we had a fail at the 80 level about a year ago, about more than a year ago. That is a strong indication that we won't see those highs again, and that we will almost definitely see the 16 level, which is the bottom of the two peaks. So technically, if that's a double bottom, we will see that 16 level, which is that bottom, and I believe that we will see it. And like I said, this time I believe we will test it, probably bounce from there, but eventually we should go through that 16 level. Okay, so if you can also see that before 1870s you had a stable gold-silver ratio, and it was well below 20s. I believe when this crisis is over, we will eventually settle at that pre-1870 level, and we will remain at that 1870 level if we have a proper monetary system, of course. If you look at the Dow gold ratio as well, I believe is that the Dow gold ratio should also go through that 1 level eventually. So it's at the minimum it should reach that 1 level and settle at or below the 1 level at 1870 levels. That is what my prediction is for the Dow gold ratio. Also, another interesting thing is this 70-year cycle. It looks like if you count from that demonetization of silver to the peak in the gold silver ratio, you get about 70 years, 1872 till 1942. That gives you 40 years from that gives you 70 years from 1942. Another 70 years gets us to 2012. Not saying that we will bottom at that 2012, but next year end of next year could be like a significant period. We are likely to see